Think about the last time you were shopping online. Did you notice the price maybe shift a little while you were looking? Or perhaps you got one of those personalized discount codes seemingly out of nowhere? Well, what looks like simple pricing is actually getting incredibly complex these days. Businesses are always searching for smarter ways, data-driven ways to set those prices. So today on the deep dive, we're going to get into exactly that.
Yeah, we're diving deep into the 2025 global market for price optimization and management software. We've got some excerpts here from a market report by Cognitive Market Research, and our mission really is to understand what this market looks like now, where it's going, what trends are pushing it, and which areas are seeing the most action.
Price optimization and management software. Yeah, bit of a mouthful, isn't it? But basically, it's all about using all the data businesses have, using it to make smarter choices about pricing. We're talking analyzing customer behavior, competitor prices, pretty much everything to find that pricing sweet spot. So let's maybe start big picture. What's the overall size, the growth we're seeing in this market?
Okay, so the report puts the global market size for 2025 at USD 1,824.5 million. That's about 1.8 billion. But what's really striking is the projection. By 2033, it's expected to hit USD 858.03 million.
Well, wait, so that's nearly $7 billion. That's not just growth, that's huge, almost quadrupling in, what, 8 years?
Exactly, it's a massive expansion.
So what's the main engine behind that kind of explosive growth?
Well, the report really points to this rapidly increasing demand for dynamic real-time pricing.
Yeah.
I mean, in today's market, businesses just can't set a price and forget it. They need to be nimble, adjusting prices based on market shifts, sometimes, almost instantly. Think e-commerce, competitor prices changing all the time. You need tools to keep up.
Absolutely. Yeah, you definitely feel that dynamism as a consumer sometimes. Okay, so let's look at the map. Geographically, where's most of this activity happening right now?
Right now, North America has the biggest slice of the pie, over 40% globally. Their market size in 2025 is estimated at USD 675.07 million. And they're still looking at a pretty solid compound annual growth rate, CAGR, of 16.3% through 2033.
Okay, so over 40%.
Yeah.
And I'm guessing the U.S. is the lion's share of that.
Oh, definitely. The U.S. market alone, that's about USD 532.63 million in 2025. And it's growing at about 16.1% annually. The report suggests that's really driven by, just intense competition over there. Canada's significant too, around 81 million, and actually a slightly higher CAGR at 17.1%. That's apparently boosted by advances in AI and machine learning. And Mexico is also, a notable part of that North American picture.
Right. AI and ML playing a role there. Okay, so North America's out front. How does Europe stack up?
Europe's a major player, too. They account for over 30% of the global market. Market size estimated around USD 529.11 million in 2025. And their projected CAGR is strong as well at 17%. So it's still very healthy growth.
17%. Okay. Are there specific countries in Europe really driving that growth?
Yeah, a few stand out. The UK, for example, about 89 million market size and a strong CAGR, 17.8%. That's linked heavily to e-commerce growth and omni-channel retail strategies. Germany is actually a bit bigger in market size, nearly 105 million, with a 17.2% CAGR. There, the demand seems to be more around personalized pricing and better customer segmentation. Then you've got France, Italy, Russia, Spain, all pretty substantial markets within Europe, too.
Okay, so North America and Europe are the big players currently.
Yeah.
But I kind of have a feeling there might be another region where things are really starting to bubble up.
You're absolutely spot on. Asia Pacific, or APAC. Currently, it holds around 23% of the market. Market size about USD 437.88 million in 2025. But here's the kicker. The projected CAGR is a huge 21.0%. That makes it the fastest growing region by quite a margin.
21%. Wow. Fastest growing. What's fueling that kind of acceleration in APAC?
Well, the report highlights increasing competition, especially in the emerging markets there. That seems to be a big driver. China's a major force, of course, about 184 million market size, 20.5% CAGR. But actually, India has the highest regional CAGR. It's an impressive 22.9%. Though its current market size is smaller, around 44 million, it just suggests, massive potential for really rapid growth. South Korea, Australia also showing strong growth. Factors like demand for personalized customer experiences are mentioned. It really seems like the rapid digitalization happening across APAC is just creating perfect conditions for these pricing tools.
Yeah, that makes total sense with everything we hear about digital transformation there. Okay, what about the other regions? South America, Middle East, Africa, how do they fit in?
So South America holds a bit over 5% of the global market, size around 69 million with an 18.8% CAGR. Brazil and Argentina are the key players there. The Middle East, that's about 2% of the market, roughly 73 million market size, but a pretty high CAGR at 19.4%. Saudi Arabia and the UAE lead the way. And Africa is currently the smallest, around 1%. Estimated at just over 40 million USD in 2025. CAGR there is 18.3%, with South Africa being the largest market within the continent. So yeah, while they're smaller market shares right now, all these regions are showing really significant growth potential too.
Okay, got it. So a clear global picture emerging. But this software, it's not just one thing, right? Are there different types, different functions within this market?
Absolutely. The report breaks it down by function type. Price optimization itself is expected to be the dominant segment. And what's interesting is how it works. It uses real-time data like demand shifts, competitor moves, customer behavior, helping businesses figure out the most profitable pricing strategies. It's really about maximizing revenue, but also staying competitive.
Right, finding that balance, okay. And the report specifically called out price analytics as the fastest growing function type. Why is that accelerating so quickly?
Yeah, that's a key point. Price analytics gives businesses these crucial real-time insights into how their pricing is performing, how customers react to changes, what the broader market is doing, and the growth. It's really being pushed by, well, big data becoming more accessible and, of course, huge advances in AI and machine learning. Companies are realizing they need to understand the why behind pricing to make even better decisions, to stay ahead. Price execution is also mentioned. That's the actual doing, implementing the prices. But the report focuses more on the growth of optimization and analytics. It's kind of a logical flow, right? Analyze first, then optimize based on the insights, and then execute.
That makes sense. Understand the data, optimize, then implement. Okay. Now, thinking about who uses this software, what kinds of applications or maybe business types are adopting it the most?
Looking at the application side, retail price management has the largest share right now, which honestly isn't too surprising. Retailers, both online and physical stores, they constantly need to tweak prices, responding to demand, competitor moves, customer behavior, and doing it across all their different channels. I mean, think how often prices change on Amazon or similar sites in just one day.
Oh yeah, we've definitely see that as consumers all the time. Prices feel like they're constantly moving.
Exactly. But there's another area growing really rapidly, CPQ software. That stands for Configure Price. Quote, this is super valuable for businesses selling complex or customizable things, products or services. CPQ software basically streamlines that whole quoting process, makes it accurate, consistent, fast. It really boosts sales efficiency. You know, imagine a company selling complex machinery. CPQ helps them generate accurate quotes quickly for every unique configuration. Buy-side price management and contract lifecycle management are also mentioned as significant application areas.
So it covers everything from everyday retail to these really complex B2B sales.
Interesting. What about company size? Is this mainly for the big guys, the large corporations?
Well, large enterprises do hold the largest market share currently, which makes sense, right? They often have more complex pricing, huge amounts of data to handle. But the report really emphasizes strong and rapid growth among small and medium-sized enterprises, SMEs.
Oh, that is interesting. Why are smaller businesses jumping on board now?
A big factor is just the availability of more affordable cloud-based solutions. They're often easier to use, too. These platforms let SMEs access pretty sophisticated pricing tools, powerful analytics, without needing that huge upfront investment in hardware and IT that used to be necessary. And as competition heats up everywhere, even smaller companies see they need data-driven pricing to, boost profits and just stay in the game. It's really sort of democratizing these advanced capabilities.
That's actually great to hear, these tools becoming more accessible. Okay, let's talk industries. We know retail is big. Which other sectors are really embracing this kind of software? Right, retail and wholesale leads, as we said. But the report points to the healthcare sector as a particularly fast-growing adopter.
Healthcare? Really? Why healthcare?
It seems to be driven by this increasing pressure for cost-efficient pricing. In medical services, pharma, insurance, you've got rising patient numbers, really complex billing, a growing focus on value-based care. So healthcare organizations are looking for ways to optimize their reimbursements, maybe improve price transparency for patients, and just generally boost financial performance in a really complicated environment. Beyond healthcare, other industries getting involved include IT and telecom, aerospace, food and beverages, travel and tourism, BFSI, that's banking, financial services, insurance, and manufacturing, too.
Wow. Okay. So it's a really diverse mix of industries finding value here. So if we were to sum up, what are the absolute core factors really pushing this market forward?
Yeah, the report boils it down to a few key drivers. First, just the basic need for businesses, any business really, to improve profitability through smarter pricing, data-backed decisions. Second, those ongoing tech advancements, AI, machine learning, big data analytics, making the tools better, more accurate, more powerful. And third, simply rising competition. It's everywhere in almost every industry, forcing companies to get more sophisticated with pricing just to keep up and protect their margins.
Makes total sense. But it can't all be smooth sailing. Are there any roadblocks, any challenges that might slow down this growth trajectory?
Yes, there are a couple of potential restraints mentioned. One is the initial cost. Implementing these systems can be expensive, and integrating them with a company's existing IT systems can be complex. That can be a barrier. Interestingly, the report also mentions, and this seems odd, a lack of standardization in junction box designs as a restraint.
Junction boxes, like
Yeah.
electrical boxes. That sounds completely unrelated to pricing software.
Right. It seems very out of place. Honestly, it's likely just an error or some kind of misplaced data point in the source report. We should probably disregard that one. The real challenges seem to be around the cost and the integration complexity.
Definitely sounds like an outlier.
Yeah.
Okay, focusing on the real hurdles, cost, integration, understandable challenges. So looking ahead now, what are the big trends likely to shape this market going forward?
Two main trends really stand out in the report. First, there's a definite accelerating shift towards personalized pricing. This is all fueled by the ability to gather and analyze huge amounts of customer data. Businesses want to tailor prices to individuals based on, past buying habits, preferences, maybe even what they think someone is willing to pay. The second big trend is the deeper integration of AI and machine learning right into the pricing software itself. This allows for much more accurate demand forecasting, more complex optimization algorithms, basically smarter, more adaptive pricing that can react almost instantly to market changes.
So potentially even more tailored prices for us as consumers and much smarter predictive engines running behind the scenes. Fascinating. And finally, what about the competition? Who are the main companies driving this innovation?
Yeah, the competitive landscape is a mix. You've got established players, but also newer companies really leveraging AI and machine learning. The main focus competitively seems to be on improving accuracy, offering more personalization, and enabling those dynamic real-time adjustments. The report names a few key players like Prisync, Pricebeam, Blue Yonder, Competera, Revionics, but it also notes that some competitor data is confidential or hidden. So the landscape might actually be even more crowded and evolving than we can fully see.
Okay, so a really active market, established names, probably some nimble innovators using AI. All right, let's try and pull this all together. What are the main insights you think our listeners should really take away from this deep dive into the 2025 Price Optimization Market Report?
I think the key things are: one, the sheer scale of the projected growth, it's significant. Two, Asia Pacific is the region to watch for the fastest expansion. Three, within the software, retail applications, and price optimization functions are dominant now, but keep an eye on price analytics that's growing fast. And four, importantly, SMEs are increasingly adopting these tools, which is broadening the market considerably.
Right, and the underlying reasons for all this activity.
It boils down to that fundamental need for better profitability, fueled by technological advances like AI and spurred on by ever-increasing competition.
And looking forward, the trends to track.
Definitely watch the move towards more personalized pricing and the continued deeper integration of AI and machine learning. Those are really set to reshape how businesses price things in the coming years.
This has been incredibly insightful. It's a market that operates somewhat behind the scenes, but clearly has a huge impact on, well, all of us as consumers. So for you, the listener, as we wrap up this deep dive, maybe think about this. As this pricing software gets even smarter, even more sophisticated, how might that change your own everyday experiences when you buy things? What does the future of value really look like when prices can become truly dynamic, maybe even uniquely personal? It's this one.
Well, it's definitely something fascinating and maybe a little unsettling to think about.